Good evening, everyone. So, welcome back to our post-market analysis. So, this is the session where I am just documenting my trades, what have I done today, and what are the hits and misses, the good and bad for the day, just for the sake of documenting and remembering it for the later as a part of learning. So yeah, as we discussed earlier, we have seen that. Let me come back to my major time frame, which is a daily time frame. So we see that price is doing some bit of a sideways price action where it did a bit of sideways earlier as well. So this is the range where the trend has been a little sideways before making a higher high, or like break of structure before doing some sort of a break of structure. Similarly, the price has re-entered that range. Could it do some bit of sideways before either breaking out or breaking down? One thing to be noted here is that the price has already made a lower low, so the possibility of this trend to change is slightly on a higher side, right? Coming back to our hourly analysis. So yesterday what happened is, yesterday price, it gapped up big time, and instantly in the third candle itself it created a certain supply zone. So the price reverted, and the price sort of got a solid rejection from the bulls, got a solid rejection from this level, and this basically, if you mark this candle, that will be called as a supply zone. So anytime the price comes to this level, there is strong possibility that the price will again face the same rejection which it faced here. That is what it means. Similarly, yesterday, same scenario. After this bearish trend, bearish swing, there was a demand zone which got printed. So we can very clearly see that there is a parallel channel of demand and supply, within which the price is expected to at least do some bit of sideways price action, right? What I did yesterday basically, after this bounce from the demand zone, I took a trade at this bearish engulf. So if I were to again mark it from a smaller demand zones and supply zones perspective, so this was my intermediate supply zone here, at which the price got a rejection, price faced a rejection, and then it was a trade which I continued, like, and I just for everyone to understand, I generally write in the money. I don't buy, I sell options. So this was where I entered, and yesterday itself I was in decent profit, but my view was still continuing bearish, because um, although the price was in certain demand zone, but I took a little bit of a bet as to price may make a equal low or a lower low before actually doing anything. So I carried that naked for today, and that gave me a decent decay as well. So from almost 40 odd points ka extra decay I got on that naked position. But another naive mistake which I did here was I did not book my profit, having seen it very clearly that there is this intermediate bullish. This was the bullish demand zone again, which got printed yesterday itself. So if the price is getting rejected from that demand zone, that means the trend may change, and as it is, there was a higher low at this point. So that is something which I missed during live trading, and my profit, which could have been relatively much better profits, were reduced by some percentage points, and I still booked profits in the day. And this whole move I missed. I mean, this was a beautiful move which could have been a very good move to have captured. This I missed, honestly. Secondly, during the second half of the day, when the price again retested this supply zone, so I generally have alerts which go off whenever the median of any zone is tested. So like right after this inverted hammer, so you see the bears are getting rejected, the bulls are getting rejected at this very strongly, and post that this high was never compromised. So this high was basically your stop loss or whatever trade on the bearish side you take. And these after right after this inverted, what do you say, confirmation. So after this confirmation there was a lower high, further equal high, or equal, you can say further lower highs only. So this is where I had taken another trade. So there are series of intermediate demand zones and supply zones. So I will again mark one intermediate demand zone, which is this. So after the price has actually broken out of this level, you see this small breakout which happened here. The price has actually went, the like the intensity of movement was very solid, versus there were so many break-off structures even before that. So there was a breakout here, there was a similar breakout here. So there were smaller, like consecutively there were not very intense breakouts, but last breakout was very significant. So the basically the demand zone before this breakout is what makes it important, or which makes it relevant for this trend to what has happened. And again the price testing this demand zone, and you see the long wicks on the on both the sides. That itself suggests, that itself shows that the bears are getting rejected and bulls are trying to take over after this demand zone. So this sideways price action is where, so something which I have learned is big players or institutions or banks, they do not enter anywhere, or especially not on breakouts. So they will always wait for this kind of a reversal or some sort of a retracement to happen to some reasonable level. Then only they will sort of because they, of course, they have bigger money, and then risk optimization is something which is their priority, not the return optimization. So yeah, that is basically a retail concept that we focus on, enhancing our returns. But anyway, coming back to that, so this was my second trade. And the third is, again, since I already traded two opportunities of the day, so last one was a very simple, with lesser capital deployed and more like a very less risk. And then again the price getting tested, this supply zone getting tested again, was my exit. So three trades for the day. And yeah, that is basically what I did. And so I have, my idea is, my intention is to sort of share these experiences for the majority, to sort of basically it's for my learning primarily. I'm little let me be very honest here, it's purely for my learning. And in the process, if I'm of any help to anyone, why not? I mean, I'll be more than happy doing it. So that being said, yeah, that is all for the day. And yeah, I'll share my view for tomorrow and in later in the evening. So we'll see what market has to do and what market has to offer for us tomorrow. Yeah, thank you very much. Good day.